Hi, I'm Hannah Wallace and you're watching FinextraTV at Sibos. In this interview, we'll be talking about cash flow management, and to help us through the topic is Gavin McClean, Head of Product Payments for Lloyds Banking Group. So welcome, Gavin. Thank you very much for joining us.
Thank you, Hannah. Great to be here.
Brilliant. So, saying good cash flow management is important to business might seem pretty obvious for some people, but what I'd really like to talk about to start off is the technology side of things and what the role of it is and how it's helping firms, but also what does it look like for those on an SME level compared to the large corporate end of the scale, say. Let's start there.
Okay, well, I'll come to the technology, but first of all, on the scale, actually, COVID and the lockdown was a bit of a leveler, really. Businesses of all sizes were adapting, in many cases, to working from home. So the need to have resilient payment practices and good cash flow management practices was an immediate challenge that most businesses of all sizes faced. And the lockdown accelerated much of the digital transformation that many of those businesses were already going through. So, removing waste and manual processing and handoffs between teams to speed up the working capital cycle or cash flow processes was essential. It's just not possible to pass bits of paper around the office when you have no one in the office. Moving from physical payments to digital payments, the adoption and acceptance of new types of payments like QR codes were all things that people faced. So in the current market, regardless of the size of the business, they're facing similar outlooks in terms of making their payment and cash flow operations resilient. Technology is playing a massive role in that. Smartphones, tablets, wearables are providing the platform for the digitisation of many purchase journeys, for example. APIs are allowing easy integration and are really accelerating the pace at which new propositions can be innovated. And of course, cloud technology is allowing providers that flexibility, scale, and cost economies to support all of that innovation. So I think the business environment is challenging for people out there, but actually the innovation enabled by technology is coming through to help businesses cope with it.
Sure. So business and payments alike have been hugely impacted by the pandemic, of course. Payments, let's talk a bit more about that, because they've had to evolve to be involve a lot less physical contact, while businesses still want to get paid just as quickly as possible to support their own cash flow position. So what I'd like to ask then is what opportunities this has opened up for tech-driven solutions then?
Okay, yeah. Well, the first thing to say is that COVID actually has acted as an accelerant to a number of payment trends that were underway already. At Lloyds, our investments have given us a platform to innovate and adapt to help customers with one of the big challenges recently, social distancing. So we see many opportunities in this space, and we see the technology as a real key enabler. So for example, paying using a URL or using a QR code is now pretty commonplace amongst our retail, hospitality and leisure customers. Pre-ordering, click and collect and pay at table solutions are being delivered in partnership with some of our fintech partners to benefit clients. And what we're also seeing is that open banking payments are now doubling every 2 months, creating lots of new opportunities. And crucially, those open banking payments settle immediately. So they really help with the speed for businesses who can't wait a few days for a card payment to settle. So there's lots of opportunities for innovation and new propositions. And actually, the technology is really enabling us to bring those solutions to market quickly.
All right. And your position, Head of Product Payments, can you talk us through operational visibility for those that aren't familiar with what it entails. Can you tell us why it's so important? And do you think we're seeing new opportunities here for technology? And if so, how? Quite a lot to fit in there.
Yeah, no, that's a good question. I mean, we're very, very excited about this area just now. If I think back, and I've been doing this longer than I care to remember, but if I think back over the last few years, increasing speed, increasing transparency, and reducing costs in payments have been some of the real driving forces in the market in recent years. And actually, the technology now is allowing us to pursue the insight or the transparency opportunity like never before. So at Lloyds, we've invested in a platform that allows our clients to access their data using a powerful in-memory analytics engine. So this will help with things like cash flow forecasts, risk management, supply chain management, liquidity management, and many other areas. And what's actually really exciting about it is the technology it employs is things like natural language search and artificial intelligence technology to enhance the level of insight. So that's enhancing the proposition from the typical static tin can reports of old to genuine insight and discovery. So we can make non-technical treasury and finance people, people like me, look like absolute heroes by generating a new level of insight, all driven by that technology. And that insight allows them to manage their business operations better, to have a greater understanding of what's going on across different parts of the business, and ultimately to make more informed decisions. So we think this is going to be a real big driver in the next year or two as businesses look to optimise coming out of the lockdown.
Sure. Well, following on from that quite nicely then, banks like Lloyds have had to play a major part in delivering financial support to businesses impacted by COVID-19, haven't they? So how have you deployed technology to help deliver this support to your customers? And maybe what have been some of the challenges along the way?
We've had a £3 billion investment programme at Lloyds, which began in 2018. Allowing us to invest in technology right across the board. And actually, that equated to about 19% of our operating costs, which is among the top quartile of our global peers for technology spend. What that allowed us to do was to deploy things like robotics process automation. It allowed us to scale the automation and machine learning. And it also allowed us to leverage fintech propositions around data to reduce the onboarding times. And all of this came together to allow us to support British businesses with 250,000 facilities through the various government schemes, the bounce back loans and things like that, providing more than £10 billion of support, as well as enabling more self-service and payment innovation to allow our customers to manage their cash flow and working capital. So I think the benefits of us being on that investment journey and focusing on how we could use emerging technologies to enhance our customer proposition actually meant we were in a good position when the crisis struck, that we were able to turn a lot of that investment and turn a lot of the new capabilities to supporting businesses in the here and now, and that will go on. As we come out of the crisis and we adapt to the new norm, as we get used to some of the innovations that have arrived in the market during the crisis, we'll continue to focus on the technology to invest to make the client propositions better.
Sure. And that's what it's all about. And it's going to be really interesting to see how businesses bounce back in the next stage of recovery. But Gavin, for now, let's leave it there. But thank you so much for calling in. It's been really insightful, and you're doing some good work at Lloyds, it's safe to say.
Thanks, Hannah, and have a great Sibos.
You too. Thank you.
Thank you.